First, we're going to jump over to George Stahl from Dow Jones. We're going to discuss the Facebook IPO. George,
yes.
How you doing?
All right, how are you?
By the way, I'm Rolf Winkler. Welcome to the News Hub. I always forget to introduce myself. It's terrible. So,
everybody knows who you are, though.
This is the new news today. Is that they've basically given us a revised price range, right? What is that revised price range?
They raised it up to $34 to $38, which, if it's priced at $38, we give it a overall valuation of $104 billion. It would seem as if it's on track. It'd be interesting to see if this is the last time it gets revised ahead of the IPO, which is coming on Friday. And
pricing on Thursday, it'll trade on Friday,
exactly,
right? Okay.
Exactly. And it just sets up this interesting dynamic, because what you're constantly hearing from the so-called professionals is that at these levels, Facebook is overvalued when you look at traditional Wall Street metrics. Meanwhile, as
100 times last year's earnings, even if they keep growing at the same rate for the next 2 years, they're still trading at something like 35, 40 times 2013 earnings.
Right. There are 33 companies with valuations of more than $77 billion, which is where Facebook would be at the low end. Only 2 have valuations of 100 times earnings. That's Amazon and Bank of America. So these are huge numbers we're talking about here. But yet you have a lot of interest from the average consumer who's looking to get into the Facebook.
Can they get those shares? Will average retail investors? I mean, they'll probably put some aside, but it's going to be.
They're going to be fighting over a small portion of the stock that becomes available on Friday. But you have this interesting dynamic where you have the average investor versus the professional competing for Facebook.
And it looks like investors, people who obviously are anxious to pile in and driving the price up, they're shaking off, for instance, the fact that revenue in the first quarter was actually down from the fourth quarter, it appears.
Right. That's one of the things that the bears like to point out, is that the growth rates at Facebook is slowing. Last year, what's expected to happen this year is supposed to be slower in terms of the revenue and earnings growth than Facebook experienced last year. And sure, you could talk about theory of large numbers, but as Apple has shown, that good companies with good products can keep growing at exceptional rates year over year.
Also, there's the potential mobile issue, of course, where they're getting a lot of users on mobile, but it's hard for them to show advertising to them now. And to the extent people switch from desktop to mobile, that means maybe fewer ads. Now they will get to pull some revenue levers, right? One thing happened over the weekend we were discussing today is they changed their privacy policy, and they're reminding people that they can show ads to you off of Facebook.
Right, and this is the bull case of Facebook, is that Facebook has all these users that it can leverage to try to get more money from. If you look at Facebook, it has 58% of the internet users worldwide have Facebook accounts, but yet Facebook, the company, gets less than 10% of the display advertising revenue, and people point to that inequity as getting closer together. So that would be why people would buy into Facebook.
And this could be we've written this and heard on the street, a particularly interesting Trojan horse is this ad network idea, where, of course, you know how you can go to other sites and sign in basically with Facebook Connect. Basically, with your Facebook login, you go to Huffington Post. And of course, if you're logged in through Facebook while you're on those other sites, Facebook has all that information about you, and if it shared that information, say, with Huffington Post might be able to target much better advertising you. This is, of course, a huge business for Google, their ad network, the display advertising they show off of Google. I think it's about $1.5 billion of net revenue last year. So if Facebook, which has better data than Google, could do something similar, presumably, that's part of the bull case, is there's revenue levers to pull that haven't been pulled yet.
Yeah, and then all of a sudden, Facebook becomes a lot more valuable, and its ad network becomes a lot more valuable to advertisers. Facebook charges more, they make more money, and shareholders are happier.